Hello students, welcome back to Educator Guru YouTube channel. Today we are going to discuss the model question paper issued by the board for the year 2022-23 in the subject accountancy for second year PUC students. Before I answer these questions, I would like to remind you, those who have not subscribed for this channel, kindly subscribe and share among your friends. Thank you. Let us start the answers. Model question paper second year PUC accountancy. Part A. Choose the correct answer from the choices given. Not for profit organizations are formed for profit, service, profit and service, none of the above. It is service. It is service. Nanda, Padma and Chandra are partners sharing profits in the ratio of 5:3:2. If Padma retires, Padma is the middle one, Padma retires, the new profit sharing ratio between Nanda and Chandra will be very simple. It is 5:3:2. This person is going to retire means take out this, then it becomes 5:2. 5:2, 5:3, 3:2, none of the above. It is 5:2. Right? Next. Equity shareholders are creditors of the company, owners of the company, customers of the company, none of the above. Equity shareholders are owners of the company. Current assets does not include short-term investments, cash and cash equivalents, building, inventories. Building is a non-current asset. So, it is fixed asset, you say it is building. Financial statements of a business enterprise include balance sheet, statement of profit and loss and balance sheet, cash flow statement, all the above. Everything includes under financial statements, it is all the above. So, if you write 5 questions, you will get 5 marks. Now, second one, fill the blanks by choosing the appropriate answers from those given in the brackets. Here there are so many answers has been given: interest rate, vertical analysis, cash flow to sacrifice. But you have to find out for which one that is suits. So it is very simple. In order to form partnership, there should be at least 2 persons. So here question number is 6. I will write here 6, or I can say here it is, that is answer is what actually 6, that means 2 persons. Old ratio minus new ratio is equal to what? Old ratio minus new ratio is sacrificing ratio 7. So it is called as sacrificing ratio. 2000 12% debentures issued at par. Here 12% means what? 12% means it is interest. It is question number 8. It is called as interest rate. Next, common size analysis is also known as, it is called as, what do you mean by vertical analysis? So, 9th one, it is vertical analysis. Purchase of any asset by paying cash results in cash outflow, because cash is going out. So, it is cash outflow. 10th, that is cash outflow. So, this is how we have to answer. So, 5 plus 5, it will get what actually now? 10. Next, match the following: A, B. Partnership deed, goodwill, realization account, Companies Act, share capital. Partnership deed. What is partnership deed? It is written agreement. A. Goodwill is intangible asset. Goodwill is intangible. What is intangible? It cannot be measured exactly. It is called as what I say, intangible. Tangible means it is exact. Intangible means it is not exact. Realization account. Realization account is dissolution of partnership firm. When you dissolve the partnership firm, you prepare realization account. Companies Act. Companies Act 2013, it has been what actually re-amended. Say earlier it was 1956, now it is re-amended, it is 2013, it is D. Next, share capital, that is shareholders fund, it is E. It is E. Now, fourth part of part A, answer the following questions in one word or one sentence each. Give an example for non-profit organization. You can say government schools, clubs, welfare societies, charitable institutions, etc. You can write any two, right? Next, who is an executor? Who is an executor? Executor is a legal representative of a deceased. What is deceased? The person one who is dead, right? Deceased partner in a partnership firm. That means the person who has dead, his claims can be claimed by the legal representative, is called as what actually? Executor. Expand DRR, very simple, it is debenture redemption reserve. DRR means debenture redemption reserve, it is in your company accounts. Next, liquidity ratios are short term in nature. State true or false. Yes, liquidity ratios are short term in nature. It is true. It is true. Give the meaning of cash flows. Cash flows means movement of cash in and out due to some non-cash items. That means movement of cash, that means cash is coming in, cash is going out. That is called as what you mean by cash flows. But when you come to a higher class, what is cash flow? We will say that it is after tax but before depreciation. Say that you will understand in the later stage when you come for degree, right? Cash flow. But at this stage, at the second PUC, you can say cash flow means it is movement of cash in and cash out, right? That is called as what actually? Cash flows. Now part B, state two features of receipts and payments account. You have to say that any two features. I have given what you call 5 features, you write only 2, right? The following are the features of receipts and payments. Nature, it is a real account, it is summarized version of cash book, or you can say it is cash book. Nature of transaction, it records only cash and bank transactions. Other than cash and bank, like depreciation, loss, profit on sale, etc. are not recorded in this account. Because it is a cash book cannot enter any other transaction other than cash and bank. Don't distinction between capital and revenue items. That means it takes into account all the transaction, whether it is a capital income or capital expenditure, revenue income or revenue expenditure, it will be recorded in cash book, that is in receipts and payments account. Opening and closing balance, it begins with opening balance of cash and bank and ends with the closing balance of cash and bank. That means we will have opening balance and closing balance. Purpose, it reveals the cash position of an organization. It helps to ascertain the total amount paid and received during an accounting period. To know that how much we have received during the period and how much we have paid for expenses. So these are the features of the receipts and payments account. Next question. What is fixed capital system? It is very simple. The name itself will define it is fixed. That means all the adjustments will be done in current account. The capital balance remains every year one and the same, which is called as what actually fixed capital system. Fixed capital system is a system under which the capital of the partners shall remain fixed, that is the same year after year. It will change only when additional capital is introduced or a part of the capital is withdrawn. Under this method, two accounts are maintained for each partner, that is capital account and current account. That means all adjustments will be done in current account. Now, question number 19. State any two factors which determine the goodwill of the firm. Goodwill is the value of reputation of a firm in respect of profits expected in future over and above the normal rate of profits. There are various factors which affect goodwill. Customer service. If any business provides better customer services such after sales services, early services, etc., then it will raise goodwill of the firm and attract more customers. Location. If the business is centrally located or located in a busy area, it can attract more customers and hence results in more profit. Therefore, locational factors has to be considered as factor while valuing goodwill. So, we can write any two, customers, service and what actually location, right. Next, give the journal entry for an asset taken over by a partner on dissolution of a firm. It is very simple. Partners capital account data to realization account. In the realization account, it appears on the credit side, whereas in the partners capital account, it appears on the debit side. State any two categories of share capital. You can easily say it is equity share capital and preference share capital. So, 22nd question, write two objectives of financial statements. Measure the short-term solvency of the enterprise, measures the long-term solvency of the enterprise, measures the operating efficiency and profitability of the enterprise. That means overall you will get all the efficiency of the firm through what actually financial statements. Next, 23rd question, list any tools of financial statement of analysis. Comparative statements, trend analysis, even you can say common size balance sheet, right, or common size statements. So, there are three things here. I have given you to comparative and trend analysis. Then 24th question, mention two activities which are classified as per AS 3. Two activities, one is operating activities, the other one is investing activities. So, two activities has been mentioned as per AS 3. This is part B. Now, part C, that is 6 marks questions. Sapna and Adarsh are partners in a firm. Sapna's drawings for the year 21-22 are given as under. Rupees 6,000 on 1/6/21, rupees 4,000 on 30th 9/21, rupees 3,000 on 30th 11/21, rupees 5,000 on 1/2/22. Calculate the interest on Sapna's drawings at 12% per annum for the year ending 31/3/22 under product method. It is very simple. From each date to the 31/3/22, you have to calculate the number of months because they have asked under what actually product method. So, under product method, it is very simple. When drawings amounts are different on different dates, then we will use product method, right. So, it is very simple. I will show you the calculation first. 1/6/21 to 31/3/22, it is 10 months. You can calculate, that is June, July, August, September, October, November, December, January, February, March. You can say it is 10 months, right. From 30th 9/21 to 31/3/22, it is 6 months. 30th 11/21 to 31/3/22, 4 months. 1/2/22 to 31/3/22, it is 2 months. So, months plays the vital role, that is called as what a period. So, then it is very simple. You can say calculation of interest on drawings under which method? Product method. Date, amount, period, product. I have given the column number 1, 2, 3. So, product is 4, it is 2 into 3, that is column number 2 into column number 3. 1/6/21, 6,000, period is 10 months, then 10 into 6,000 is 60,000. 30th 9/21, 4,000, 6 into 4,000 is 24,000. 30th 11/21, 3,000 into 4 is 12,000. 1/2/22, 5,000 into 2 is 10,000. Total it comes to 1,06,000. Calculation of interest, it is very simple. Product 1,06,000 into 12% into 1 divided by 100 into 12 because months is there. So, by 12. So, 12 get cancelled, 0 0. Then the interest is how much actually? 1,060. It is very simple. interest on drawings of Sapna is how much actually 1060. Next question. 26th question. Arjun, Anshul and Akash are partners in a firm sharing profits and losses in the ratio of 2:1 respectively. Anshul retires, that means the middle one retires from the firm. Arjun and Akash agreed to share the future profits in the ratio of 3:1. They have given the new ratio as 3:1. That means between Arjun and Akash it is 3:1. Calculate the gain ratio of Arjun and Akash. So very simple. Gain ratio is equal to new ratio minus old ratio. New ratio, that is 3:1, are 3/4 and 1/4. Old ratio, that is 2/5, 2/5, 1/5. Annual retires, so you take out 2/5, so it becomes 2/5, 1/5, that is 2/5 and 1/5. Gain ratio, new ratio minus old ratio, 3/4 minus 2/5 is equal to, the LCM is 20, then you take that 15 minus 8 is equal to 7/20. The other one is 1/4 minus 1/5 is equal to 20, then 5 minus 4 is equal to 1/20. So Arjun gain ratio is 7/20, Akash gain ratio is 1/20. Now question number 27. Navya, Deepa and Kiran are partners sharing profits and losses in the ratio of 2:1. Their capitals as on 1/4/21 were 90,000, 90,000, 45,000 respectively. Deepa died, that is the second one. Deepa died on 1/10/21, that is on 1st of October 21, and partnership did provide the following. Interest on Deepa's capital at 6% per annum. Deepa's salary is 2,500 per month. Deepa's share of accrued profit up to the date of death based on the previous year profit. Firm's profit for the year 2021 was rupees 72,000. Deepa's share of goodwill 12,000 as per AES 26. You must be very careful. You cannot continue that goodwill. It should be shared by what actually the continuing partners. Then it should be written off. Ascertain the amount payable to Deepa's executor account by preparing Deepa's capital account. Students, first what you should do is, you please calculate everything. Calculation of number of months, that is from the opening date 1/4/21 to the date of death 1/10/21. How many months? 6 months. April, May, June, July, August, September. That's all, because 1st of October is up to September, it is how many months? 6 months. Your all calculations must be for 6 months. Next, interest on capital for 6 months, 90,000 into 6 into 6 divided by 100 into 12. It comes to how much actually? 2,700. Salary for 6 months, 2,500 into 6 is 12,500. Calculation of share of profit up to the date of death. For 12 months, the profit is how much actually? 72,000 last year. For 6 months, it is how much actually? 36,000. But in this 36,000, what is the share of Deepa's? It is 36,000 into 2/5 is equal to 14,400. Then share of goodwill 12,000, that should be divided between 2:1 of what actually the other two partners, that is Navya 8,000, then Kiran how much actually? 4,000, which has been shown clearly. Now you have to prepare Deepa's capital account. By balance brought down 90,000, by interest on capital 2,700, by salary 12,500, by profit and loss expense account I have written, that is profit up to the date of death, because we do not know, we are estimating that profit, that we may get the same amount of profit. That is why it is under suspense till that accounting year is what actually closed. For that sake, it is called as profit and loss suspense account 14,400. Then goodwill, that is Navya's capital account, how much actually? 8,000. Then Kiran's capital account goodwill, how much actually? 4,000. That means as per what do you call 26, accounting standard 26, you have to share. Then Deepa's executor's account, you have to pay 1,31,600. So, this is what they have asked, but you have to do all these calculations clearly so that you can prepare very easily the PAS capital account. Now 28th question, Vignesh Company Limited issued 10,000 8% debentures of rupees 100 each at par, payable as follows: rupees 20 on application, rupees 50 on allotment, rupees 30 on first and final call. 50, 20, 70, 70 plus 30 is 100. So, it is at par. All the debentures were subscribed and the money duly received. Pass journal entries in the books of the company. So, it is very simple. You know how to pass journal entries. Journal entries in the books of Vignesh Company, day to particulars, journal folio, debit, credit. Bank account debtor 10,000 into 20, it is 2 lakh. To debenture application account 2 lakh. Then it should be transferred to what actually debentures account, debenture application account debtor to 8% debentures account 2 lakh. Then again allotment money is due, debenture allotment account debtor 10,000 into 50 is 5 lakh, to 8% debentures it is 5 lakh, that is debenture allotment money is due. Then you have received that bank amount, that is bank account debtor 5 lakh to debenture allotment account 5 lakh, that is allotment money received. Debenture first and final call account debtor, that is 10,000 into 30, it is how much actually 3 lakh, to 8% debentures it is 3 lakh. So, first and final call money is what actually due. Then bank account debtor to debenture first and final call account 3 lakh, 3 lakh, that means first and final call money received. So, very simple, you will get one question like this, amount may change, but you will get such type of question. You can pass the same entries with only one thing is, it may be 9% debentures, it may be 10% debentures, it may be 7% debentures, but the amount changes, but the system is one and the same. 29th question, from the following information extracted from the books of Sunrise Limited, prepare balance sheet of the company as at 31/3/22 as per schedule 3 of the Companies Act 2013, right? Shareholders fund. Say you know that shareholders fund consists of two things, one is share capital, the other one is reserves and surplus. Then non-current liabilities, that is long term, which is called as what actually long term loans which have taken. Then fixed assets, inventories, trade payables. Trade payables is current liability, correct? Here has been trade payables, trade receivables, cash and cash equivalents. So, I have to write it in the format, that is as per the schedule of the Companies Act 2013. So, very simple. Sunrise Limited, balance sheet as on 31/3/22, particulars, note number, if you are giving any details then you have to give note number, then amount. First one is what actually equity and liabilities, that means capital and liabilities. Number 1, shareholders fund, A share capital, B reserves and surplus, both together is how much actually 20 lakhs. I have written 20 lakhs. I have put one flower bracket because they have not given that split, how much is share capital, how much is reserves and surplus. Second one, non-current liability. They have not mentioned what is non-current liability. It may be any long-term loan, 19 lakh 60,000. Then third one, current liabilities, which is trade payables, how much actually 1 lakh 20,000. Total it comes to how much actually 40 lakh 80,000 on the liability side. Then asset side, number 1, non-current assets, that means it is not current asset, it is fixed assets. Under that it is called as what you mean tangible assets and intangible assets. So, tangible and intangible together they have given, it is how much actually 32 lakhs. Then current assets, they have given the differences, inventories 80,000, then trade receivables 3 lakh 20,000, cash and cash equivalents 4 lakh 80,000. If you add, then it comes to how much actually 40 lakh 80,000. Very easy of preparing as per schedule 3, that is Companies Act 2013, the balance sheet. Now the question number 30th, calculate the current ratio and quick ratio from the following information. Inventories 1 lakh 20,000, trade receivables 90,000, cash and cash equivalents 22,800, trade payables 2 lakh 34,000, current investment 7,200, proposed dividend 6,000, bank overdraft 60,000. It is very simple. They have asked for current ratio and quick ratio. It is very simple. What you have to do is first calculation of current assets, calculation of current liabilities. Current assets, inventories, trade receivables, cash and cash equivalents and current investments. If you add all these things, then you will get 2,40,000 current assets. Current liabilities, trade payables, proposed dividend and bank overdraft, you will get how much actually? 3 lakh. Then what you have to do is quick assets. How to find out quick asset? Current assets minus inventories is what actually? Quick assets. So 2,40,000 minus 1,20,000. Take out that inventory, then you will get quick assets as 1,20,000. Then what you have to do? Apply only the formula. Current ratio is equal to current asset divided by current liability. Current assets is 2,40,000. Then current liability is 3 lakh. So ratio is 0.8:1. As per the norm, it should be 2:1. It is less than that. That means your liabilities or current liabilities are more than what actually your current asset. The firm liquidity position is not good. Then quick ratio. Quick asset divided by current liabilities. 1,20,000 divided by 3 lakh. 0.4:1. Here also actually it should be 1:0.5. Here also it is more. That means once again liquidity position of the firm is not good, right? Now problem number 31. From the following information calculate cash flow from financing activities. 1,420, 31,321. Debentures 8 lakh, 10 lakhs. Debentures has been 8 lakh to 10 lakh means you have issued further debentures of rupees how much actually? 2 lakh. That means it is cash inflow. Preferential capital 3 lakh has become 5 lakh. Again during the year you have issued 2 lakh what actually? Preferential capital. That means both it is debentures and preferences you have cash inflow, that is 2 lakh and 2 lakh. During the year company redeemed debentures of rupees how much actually? 1 lakh. Say you have redeemed 1 lakh means you have repaid rupees how much actually? 1 lakh. Anything is repaid, it is called as cash outflow. They have asked what actually? Calculate cash flow from the financing activities. Very simple. Calculation of cash flow from financial activities. Number 1, issue of debentures, that means received 2 lakh. Issue of preferences 2 lakh. Redemption of debentures during the year. I have put it in the bracket. Anything I put it in the bracket, it indicates that it is cash outflow. If I don't put bracket, then it is cash inflow. If I put bracket, then it becomes what actually? Cash outflow. So cash inflow is 4 lakh. Cash outflow is 1 lakh. So net cash flow is how much actually? 3 lakh. Cash flow from financial activity is how much actually? 3 lakh. This is how you have to do your calculation of financial activities. Now part D, that means each question carries 12 marks. Following are the balance sheet and receipts and payments account of Star Sports Club Sagra. Right? Balance sheet as on 31/3/2021. Outstanding salary 6,000. Subscription received in advance. So that means it is belongs to next year 5,000. Capital fund 1,35,500. Cash 10,500. Sports material 25,000. Furniture 21,000. Land 90,000. Total 1,46,500. 1,46,500. Receipts and payments account for the year ending 31/3/22. Opening balance of receipts 10,500. Subscriptions 62,000. Entrance fees 10,000. Sale of old newspaper 2,000. Sports fees 7,500. Salary 23,000. Sports materials 15,000. Investments 20,000. Postage 1,400. Electric charges 1,600. Upkeep of ground 6,500. Newspaper 6,000. Then balance carried down 18,500. So try to understand here. You can say that subscription revenue, entrance wait, sale of newspaper revenue, sports fees what actually revenue, salary revenue, sports material capital, investment capital, postage revenue, electric charges revenue, upkeep of grounds revenue, newspaper revenue. This balance, opening balance 10,500, which has already appeared here in what actually in the balance sheet, opening balance sheet, it is called as opening balance sheet. Now this closing balance, that is of cash, it appears under closing balance sheet. I have not entered anything on entrance fees. Why? Let us see, any adjustment has been given for entrance fees. Outstanding subscription for the year 21-22, 2,500, that means additional. Outstanding salary as on 31/3/22, 8,000, again additional. Half of the entrance fee are to be capitalized. That means half should be treated as revenue, half should be treated as what actually capital. So what I am going to write is C plus R, very simple. When I write C plus R, that is half is capital, half is revenue. Then depreciation on sports material amounted to 8,500. Prepare income and expenditure account for the year ending 31/3/22 and balance sheet as on that date. So when you prepare like this, that is RRR, anything is R, it appears under what actually your income and expenditure account. Anything C which directly goes to balance sheet. So that is the small hint in receipts and payments account, or converting in receipts and payments account into income and expenditure. So I will show you now. Here it is one by one. Sports club, right? Income and expenditure account for the year ending 31/3/22. Expenditure amount, income amount, debit side, credit side. By subscription 62,000. Last year 5,000 has been given for the current year. So add last year received amount 5,000. Add outstanding for the year is 2,500. Total it comes to 69,500. Entrance fees, I have given half of 10,000, half to be treated as revenue, 5,000. By sale of old newspaper, that is 2,000. By sports fees, 7,500. To salary, 23,000. Less last year amount outstanding, 6,000. Add current year outstanding is how much actually? 8,000, 25,000. So you should remember, anything which belongs to last year, anything belongs to next year should not be taken into account under this year income and expenditure account, because we would like to know what is the surplus or deficit of the current year. That is why anything belongs to last year, anything belongs to next year should not be taken into account. Then postage 1,400, electric charges 1,600, upkeep keeping charges 6,500, newspaper 6,000, depreciation on sports material 8,500. So your credit side is more than debit side. So it is very simple. When you take, it is called as 35,000 is what actually surplus. It is earlier called as, what do you mean by excess of income over expenditure, but now they have made it a short form. It is called as surplus, or it is called as deficit. Now it is surplus. Now we have to prepare balance sheet as on 31/3/22, right? Liabilities, assets. Capital fund has already been given in the problem, 1,35,500. Half of the entrance fee add 5,000, then surplus add 35,000. Total it comes to now 1,75,500. Outstanding salary is 8,000. Cash 18,500. Sports material 25,000. Add additions 15,000, then it comes to 40,000. Less depreciation 8,500, then it comes to 31,500. Furniture 21,000, land 90,000, investments 20,000, outstanding subscription 2,500. So it is 1,83,500, 1,83,500. So automatically your balance sheet will tally. This is how we have to prepare a conversion of the receipts and payments account into income and expenditure account, and as well as balance sheet. Now problem number 33. Ashwini and Anita are partners sharing profits and losses in the ratio of 3:2. Their balance sheet as on 31/3/21 was as follows. Creditors, bills payable, reserve fund, capitals, Ashwini, Anita. Cash at bank, bills receivable, debtors, stock, furniture, building. On 1/4/21, Anvita is admitted into partnership on the following terms. She brings 50,000 as per goodwill, as her capital, and 30,000 towards goodwill for 1/6 share of future profits, right? Half of the goodwill is to be withdrawn by the old partners as per 26 AS 26. So you should remember, you cannot show goodwill in the balance sheet, so it should be what actually written off. Depreciate furniture by 10% and appreciate building by 23,000. Make provision for doubtful debts at 5% on debtors. Provide 2,000 for outstanding repair bills. So what they have asked, prepare revaluation account, partners capital account and new balance sheet of the firm. So very simple, you have to prepare first revaluation account. Building has been increased by buildings 23,000, furniture depreciated 2,000, you have to create RBD 2,000, outstanding repairs 2,000. Now profit will be transferred to old partners capital account, that is 10,100 and 6,800, 17,000. It is finished. So students, you remember, first you prepare new partners capital account, then you prepare the old partners capital account, because it becomes easy. If you prepare all the partners capital account under one head, then you will get confused. It is very difficult. For your age it is difficult. For that sake, what I have done is, first I have prepared Anvita's, that is new partners capital account. By cash towards capital 50,000, by cash towards goodwill 30,000. Then what you have to do with that 30,000, that should be distributed between Ashwini and Anita, that is 18,000 and 12,000. Then the balance of Anvita's capital is how much actually? 50,000. That means 50,000, 50,000. This 30,000 has been transferred to the old partners capital account. Now old partners capital account, right? By balance brought down 1 lakh, then 70,000. They have a old reserve 18,000, 12,000. Then revaluation profit 10,200 and 6,800. Then we have received towards goodwill from Anvita 18,000, 12,000. Here it has been debited, here it should be what actually credited. Next, to cash, half of the goodwill has been withdrawn. Say 18,000, 12,000 is there, half is 9,000 and 6,000. Then balance is 1,37,200, 94,800. By balance brought down 1,37,200, 94,800. Now you have to prepare the new balance sheet. Liabilities, assets, capital accounts, Ashwini 1,37,200, Anita 94,800, new partner is 50,000, total 2,82,000. Creditors 30,000, bills payable 10,500, outstanding repairs 2,000. Cash at bank, we had a balance of 32,500 plus 50,000 has been given towards capital plus 30,000 towards goodwill. Half of the goodwill has been withdrawn, minus 15,000. So balance of cash at bank is 97,500. Bills receivable 8,000, debtors 40,000, less reserve for bad debts 2,000, then it comes to 38,000. Stock 25,000, furniture 20,000, less depreciation 2,000, it comes to 18,000. Buildings 1,15,000 plus appreciation 23,000, total it comes to 1,38,000. So total of the new balance sheet is 3,24,500, 3,24,500. Even you can prepare cash at bank separate account, or you can show within the bracket how it will be done. Plus means add, minus means it has been withdrawn, right? This is how we have to prepare the admission of a partner. Now problem number 34. Suma and Rima are partners sharing profits and losses in the ratio of 2:1. Their balance sheet as on 31/3/22 is as follows. Balance sheet, creditors, bills payable, Suma's loan. Suma is a partner. That means this loan should not be transferred to realization account, it should be paid directly in the bank account. Reserve fund, undistributed profit, capital accounts, Rima. Cash at bank, bills receivable, sundry debtors minus PDD, that is provision for doubtful debts. It is a provision. So while transferring to realization account, you are supposed to transfer 45,000 and credit side you should take 5,000 because it is a provision for doubtful debts. Investments 15,000, furniture 20,000, machinery 25,000, vehicle 90,000. Then the accumulated loss is 15,000. On the above date, the firm was dissolved. The assets were realized as follows: bills receivable 8,500, sundry debtors 42,000, investments 18,000, machinery 20,000 and furniture 18,000. Vehicle was taken over by Suma. That means vehicle was taken over by Suma. Dissolution expenses 3,000. All the liabilities were discharged in full. Prepare realization account, partners capital account and bank account. Now it is very simple. In the books of Suma and Rima, realization account. Transfer all assets to the debit side of realization account, all liabilities to the credit side of realization account. To bills receivable 10,000, to sundry debtors 45,000. I told you I have not deducted, that is 5,000 PDD, 45,000 I have taken directly. Then investments, furniture, machinery, vehicles. Creditors 12,000, bills payable, here I have taken PDD, provision for doubtful debts 5,000, 37,000. Then by bank account, under that what are the assets realized? You are supposed to write it in the inner column as per the norms. Bills receivable 8,500, debtors 42,500, investments 18,000, machinery 20,000, furniture 18,000, total 1,07,000, and Suma has taken vehicle 82,000. 1,07,000 plus 82, it comes to 1,89,000. The asset value is 2,05,000, but you are getting only 1,89,000. That means it is a loss. Then you have to discharge all liabilities. Sundry debtors 12,000, bills payable 20,000 and realization expenses 3,000. This should come under a bank account 35,000. So debit side is more than the credit side. You have incurred a loss of 14,000 that should be distributed among Suma and Rima in their profit sharing ratio, that is 2:1. 9,333, then 4,667. Total 2,40,000, 2,40,000. Next, we have to prepare partners capital account. Very simple. By balance brought down 1 lakh, then 50,000, then reserve fund, that is undistributed reserve 24,000, 12,000. Profit loss account, that is undistributed accumulated loss 10,000, 5,000. Then vehicle has been taken over by Suma, that is realization account, vehicle taken over 82,000. For Rima dash, realization loss 9,333, 4,067. Then ultimate balance payable to Suma and Rima is 22,667, 52,333. Then you have to prepare bank account. Bank account should tally. You have a balance of 10,000 and assets realized is 1,07,000. Then liabilities paid off including realization is 35,000. Then here I have taken Suma's loan directly, right? Suma's loan 7,000. Suma's capital, that is 22,667. Rima's capital account 52,033. Ultimately bank account is tallied. That means what problem that you have done is right. Now problem 35. Conquest Limited issued 20,000 equity shares of his 100 each at a premium of 10 rupees per share. The amount was payable as follows: rupees 20 on application, 50 on allotment, then 40 on first call. All the shares were subscribed and the money duly received except the first and final call on 1,000 shares. The directors forfeited. Forfeit means what? Cancel. There are two things to cancel. One is the shares which has been allotted to him will be cancelled for non-payment of call money, and the other one is whatever the amount has been paid, that will also be forfeited, that will be taken by the company. For both the things it will be called as what? Forfeit. Forfeit these shares and reissued at a rupees 85 each as fully paid. Past journal entries in the books of the company. So very simple. Journal entries in the books of Conquest Limited. Particulars: ledger folio, debit, credit. Bank account 20,000 into 20, 4 lakh. To share application 4 lakh. This amount should be transferred to capital. Share application account data to equity share capital account 4 lakh, 4 lakh. Share allotment account 20,000 into 50 including premium. Premium is 10. So 20,000 into 50 is 10 lakh. To equity share capital it is 8 lakh. To security premium is how much actually? 2 lakh. Bank account debtor 10 lakh. To share allotment account 10 lakh. That means allotment money received. Then share first and final call account debtor 20,000 into 40, 8 lakh. to equity share capital account 8 lakh. But we did not get all 20,000, we did not get 1,000 shares first and final call money. That means we received only for 19,000. Bank account debtor 19,000 into 40, 7,60,000 to share first final call account 7,60,000. What the directors they did, they are going to forfeit this 1,000 shares. That means cancel. How they are going to cancel? It is very simple. Debit share equity share capital account 1,000 into 100. What is the face value? 100. So 1 lakh. How much has been forfeited? That means 60 has been paid. That is 1,000 into 60. It is 60,000. To share first and final call account that he did not pay 40, it comes to 40. 60 plus 40, it comes to 1 lakh. That 10,000 extra premium, it will be taken by the company. Then it has been reissued. Bank account debtor 1,000 into 85, 85,000 forfeited. That means this is the happened because of forfeiture. 1,000 into 15 rupees is a loss, 15,000. To equity share capital account 1 lakh. Now we have to find out the excess balance in forfeited shares account should be transferred to capital reserve account. Once in a way you are going to get capital reserve. Forfeited shares account debtor, that is 1,000 into 60 minus 15. That means he has paid 60, but we have incurred another 15 rupees loss. That means 45 into 1, that is 45,000 to capital reserve account 45,000. So balance of a forfeited shares account transferred to capital reserve account. This is how we have to work out forfeiture of shares. Now problem number 36. Pass the journal entries for the following. So students, you must be very careful in this type of entries. Say here they will get you A, B, C, D different transactions, but for each one you have to pass two journal entries. Why? One is issue, the other one is you have to transfer. When you transfer, along with that you should keep in mind that is how you are going to redeem. Whether you are going to redeem at par, discount, premium, whatever it is. For that you must be very careful. So to pass that one, if it is A, you will have to pass two journal entries. For B transaction, two journal entries, like that you have to pass. Issued 10,000 9% debentures of 100 each at a premium of 10% and redeemable at par. So issued at premium but redeemable at par. So how you are going to pass journal entry? Bank account debtor 110, that is 11 lakh, to debenture application allotment 11 lakh. Debenture application allotment account debtor, that is 11 lakh. I have not written here, don't worry, it is 11 lakh. 11 lakh to 9% debentures 10 lakh, to security premium 1 lakh, because it has been redeemed at what actually par, that is why it is 10 lakh and premium is actually 1 lakh. Second one, issued 10,000 9% debentures of 100 each at a discount of 10% and redeemable at a premium of 10%. So you are incurring two type of losses. One is you are issuing debentures at a discount of 10%, and while redeeming you are giving a premium of 10%. That means you have incurring two losses, 10%, two loss. Then how you are going to pass journal entry? Bank account debtor 10,000 into 90, because it is not 100, it is 10% discount, 90, 9 lakh, to debenture application allotment 9 lakh. Debenture application allotment account 9 lakh, loss on issue of debentures. You will think only 1 lakh, it is not 1 lakh, 1 lakh discount, 1 lakh premium. Issued at discount but redeemable at what actually premium, then it becomes 2 lakh. To 9% debentures 10 lakh, to premium on redemption of debentures is how much actually 1 lakh. 9 plus 2 11 lakh, 10 plus 1 is 11 lakh, right. Next C, issued 10,000 9% debentures of rupees 100 each at a premium of 10%. You are issuing at what actually a premium and redeemable at a premium of how much actually 10%. You are issuing at premium and redeeming at how much actually premium. How you are going to write? Bank account debtor 110,000 into 110, 11 lakh, to debenture application allotment it is how much actually 11 lakh. Debenture application account debtor 11 lakh, loss on issue of debentures is how much actually 1 lakh, to 9% debenture 10 lakh, to premium on redemption of debentures is how much actually 1 lakh, to security premium is how much actually 1 lakh. So 11 lakh plus 1 lakh is 12 lakh, 10 plus 1 it is how much actually 12 lakh. Then The last journal entry, issue 10,000 9% debentures of 100 each at a discount of 10% and redeemable at par. Bank account debtor 10,000 into 90, 9 lakh. The debenture application allotment is how much actually? 9 lakh. Debenture application allotment is how much actually? 9 lakh. Discount on issue of debentures is how much actually? 1 lakh. To 9% debentures, it is how much actually? 10 lakh. So this is how you have to pass two journal entries when it has been issued at premium, discount, par, right? You will get only amount will change, but system of transactions will be one and the same. Now problem number 37. From the following balance sheet of a Venus Company Limited, prepare common size balance sheet as on 31/3/21 and 31/3/22. Balance sheet has been given. Equity and liability, shareholders fund, under that share capital, reserves and surplus, non-current liabilities, long-term borrowing, current liabilities, then assets, non-current assets, tangible, intangible, current assets, inventories, other current assets. Students, it is very easy. You have to convert this balance sheet for percentage, that means for 100. Why? It is very easy to make comparison. Very easy for make comparison. Actually, for your level, you are going to only convert into common size balance sheet. But when you come to higher class, you are going to write the interpretation for that also. Why it is increased, why it is decreased, how it is decreased, for what reason it has decreased. So that all you have to write when you come for your higher class. But now here, you just say that it is very simple. 24 lakhs is there. Total is how much actually? 65 lakhs. 24 lakhs divided by 65 lakhs into 100. 10 lakh divided by 65 lakh into 100, 10 lakh divided by 65 into 100, 21 lakhs divided by 65 lakhs into 100. That means you will get percentage, how much percentage of share capital, how much percentage of reserves or surplus, how much percentage of long term borrowings, how much percentage of trade payables. In the similar for the next year. In the similar fashion, we do the same thing for what actually our current, that is assets also. So let us see here. Common size balance sheet as at 31/3/20 and 31/12/21, 31/3/21. Particulars, absolute amount, percentage of each item to total assets. Number 1, equity and liabilities, right? Shareholders 24 lakhs, 30 lakhs, then reserves 10 lakh, 15 lakhs, non-current 10 lakh, then 12 lakhs, current liabilities 21 lakh, 26 lakh. Then what I have done, 24 lakhs divided by 65 lakhs, it comes to 36.92. 10 lakhs divided by 65 lakhs, it comes to 15.38. 10 lakhs divided by 60 lakhs, it becomes to 15.38, same amount, same percentage. 21 lakh divided by 65 lakh, 32.32. In the similar fashion, this 30 lakhs divided by 83 lakhs, 36.14. 15 lakhs divided by 83 lakhs, it is 18.07. 12 lakh divided by 83 lakhs, it is 14.46. 26 lakhs divided by 83 lakhs, it is 31.33. So in the similar fashion, we do it for our assets also. In the similar fashion, that is 26 lakhs divided by 65 lakhs, it becomes 40%. Now you see, instead of saying 26 lakhs, 28 lakhs, it can say that 40%, 33.73%, 18.46%, 20. I think it becomes easy, whether it's increase, decrease, right? Why it is like that, we can see. That means it has been condensed to percentage, right? So when you do that one, then that is called as, what do you mean by common size balance sheet. For your reference, you can say in your calculation, you can do like this. You can say that 24 lakhs divided by 65 lakhs, you can show it in the calculation separately for each item, is equal to 36.92. Likewise, 10 lakhs divided by 65 lakhs into 100, it is 15.38. You can show it for each item like this separately, then you can write it directly in your what actually answer. But it is very easy, 100% you are going to get such type of common size balance sheet, you do it, right? Now problem number 38. From the following information, calculate inventory turnover ratio, which is also called as stock turnover ratio. Trade receivable turnover ratio, which is also called as debtor turnover ratio. Trade payable turnover ratio, which is also called as creditors turnover ratio. Gross profit ratio, net profit ratio, operating ratio. Very simple. They have given all the items. Revenue from operations 12 lakh, gross profit is 2 lakh 40,000, average inventory 1 lakh 20, Net credit revenue from operations 7,20,000, net credit purchases 6 lakh, average trade payables is 3 lakh, average trade receivables is 1,80,000, operating expenses 1,20,000, net profit 1,20,000. So, very simple. Inventory turnover ratio is equal to cost of revenue from operation divided by average inventory. What is average inventory? Opening inventory plus closing inventory divided by 2 is average inventory. What is average trade receivable? Opening plus closing divided by 2. Wherever average means it is opening plus closing divided by 2. Cost of revenue from operations is equal to revenue from operations minus gross profit. 12 lakh minus 2 lakh 40, then it comes to 9 lakh 60 is cost of revenue. That is cost of revenue from operations. So, inventory turnover ratio is equal to 9 lakh 60 divided by 1 lakh 20, it is 8 times. You are supposed to mention always ratios under times. Trade receivables ratio, turnover ratio, which is also called as debtors turnover ratio, net credit revenue from operations divided by average trade receivables. 7,20,000 divided by 1,80,000, it comes to how much actually? 4 times. Trade payable turnover ratio is equal to net credit purchases divided by average trade payables. Trade payable is also called as creditors turnover ratio. 6 lakhs divided by 3 lakh, it comes to how much actually? 2 times. Right? Then gross profit ratio is equal to gross profit divided by net revenue from operations into 100. 2 lakh 40 divided by 12 lakh into 100, it comes to 20%. Net profit ratio, net profit divided by net revenue from operations into 100. 1 lakh 20 divided by 12 lakh into 100, it comes to how much actually? 10%. Operating ratio, cost of revenue from operation plus operating expenses divided by net revenue from operations into 100. 9 lakh 60 plus 1 lakh 20 which has been given in the problem divided by 12 lakh into 100, 10 lakh 80 divided by 12 lakh into 100, it comes to 90%. Say very simple, if you say that net profit ratio is how much actually? 10%. Then what is operating profit ratio? It is very simple, 100 minus 10, it is how much actually? 90. Because it is just opposite of that. If you are so intelligent, you can easily say that you can check the answer. When this net profit ratio is 10%, then operating ratio must be the remaining part. Very simple, right? Now, part E. It is last part of your question paper. Before I explain, I request those who have not subscribed for this channel, kindly subscribe and share among your friends. Alright. So, part E, how do you treat the following in the absence of partnership deed? Profit sharing ratio, interest on capital, interest on drawing, interest on advances from partners, remuneration to partners for firm's work. Very simple. Here, that is profit sharing ratio, it will be shared equally in the absence of partnership deed. Interest on capital, no interest will be allowed. Interest on drawing, no interest will be charged on drawings. Interest on advances or to partners, it is maximum 6%. Remuneration to partners for firm's work, no remuneration will be allowed, no remuneration will be given. So, this is how you have to write the answers for question number 39. Now, what is 40? Write a pro forma of balance sheet of a company with main heads only, with main heads only. So, this is the balance sheet which has been given, right? That is balance sheet of dash company, you can write as on, that is sources of funds and applications of fund. That means where you got it and how you are actually distributed. Share capital, reserves and surplus, then non-current liabilities, then secured loans, unsecured loans, application of funds, fixed investments, current assets, loans and advances, less current liabilities and provisions, then you will get what actually miscellaneous expenses. If you write this pro forma as per 2013 of Companies Act, then that is what you call by one important question. You can write it very easily. You remember this pro forma and you just repeat it. Next question, the last question of your question paper. Prepare comparative statement of profit and loss with 5 imaginary figures. 5 imaginary figures. prepare comparative statement with 5 particulars 31/3/2014, 31/3/2015, absolute increase or decrease, percentage increase or decrease, revenue from operations, add other incomes, total revenue, that is 1 plus 2, less expenses, profit before tax, less tax, then profit after tax. This you are going to do it continuously when you come for your higher class. This is very, very important, right? So you write the amount, then 1 lakh has become 1,25,000 increase or 25, then percentage of increase 25, 10,000, 15, 25,000 increase or 25,000, 15%, 1 lakh 10, 1 lakh 50, 40, 36.36, 60, 90, 30,000, then 50%, then 50,000, 60,000, 10,000, then 20, 25, 30, 5,000, 20. So profit after tax 25, 30, only 5,000 has been gained. The percentage of increase is 20%. So you can write any figures. Where I have given you some figures where you can practice such type of, you can make it double, you can make it half, you can make it quarter, then you can practice, right? So once again I wish all of my students all the very best for your exams. Practice, right? Then those who have not subscribed for this channel, kindly subscribe and share among your friends. Thank you. Once again, I wish you all the very best.